Okay, wow. That's all I got to say is wow. I was looking at the new numbers for inventory here in Central Florida, and we are up almost 100% since last year at this time, 98.1%. And that is huge. And obviously, one of the things that will influence pricing, both for us in the market, our clients, I'm a real estate investor, is if we got enough supply to actually start making housing prices go down. Obviously, if you have one apple for sale and 10 people that want to buy it, that's going to make that apple really valuable. But if you have 10 apples and only one person, then they're giving them away. So where are we at? And I wanted to look at the numbers and where we are in relation to some kind of market correction. Now, if you're in the industry, you probably know already the market is softer, where you're getting some terms and stuff that you hadn't gotten before, like sellers paying closing costs. But I want to look at the actual inventory and the data. I'm not a market cheerleader. The whole point when I started doing these videos a couple years ago, looking at the actual market data, was to figure out what direction the puck's going. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And let's start by looking at the 20-year history spreadsheet, or actually PDF that you can print as a real estate agent, but I got it right here. When we look here, this is the 20-year history, and let's scroll to the bottom here to kind of see where we're at. So this is June of 2024 when I'm doing this, number to the end of June, rate 6.69%, 10,796, and just over 4 months of inventory. Now, when was the last time that we had 10,796,000 homes on the market? That's the first thing I was thinking. So I scrolled back. It wasn't 2020, 19, 18, 17. It was 2016. So 2016, we had 10,777 homes on the market. Average days on market was 76. We had 5 months of inventory, so not that off of where we're at right now, but rates were 3.93%. So we have to go back all the way to 2016 to find a time where we had this many homes on the market. Now, I always like to show this because obviously this is not like 2008, but if we were to compare this to 2008, the market correction of the Great Recession, we had 25,000 homes on the market, 31 months of inventory, 117 days of days on market. So obviously somewhere between, let's call it 10,000 homes and 25,000 homes on the market would be a giant price correction. So I wanted to look at the data. So that's the last time that we actually had this much inventory on the market. But what does the data say? Like what direction are prices headed? And where are we likely to go over the next couple years? Well, we can start by looking at rates. So this is Mortgage News Daily. Rates are different for everybody. Everyone's credit score is different. You can buy the rate down, do all kinds of things, but I like to look at the same measurement all the time. Rates are at 6.8% as of today. What is important about that is the trend. So you can see it's been almost March since we were where we're at right now. So we've had March hit, rates got under 7%, and they immediately shot back up where we took out almost as high of 8%. We got just over 7.5%, and then we've been on the slow trend down. The trend is what matters in rates. So what is likely to happen? Well, the Fed, and a lot of the Fed presidents are speaking out right now, is that they're actually considering dropping rates. And I would take out the word considering. They are going to drop rates. It's just a matter of when. Probably not in July. The meeting in September, there's like an 80+% chance. So one difference, I would say, between 2016 and now is the trend. I can tell you if we had 3.93% rates like we did in 2016, the 10,000 plus homes that we have on the market would evaporate very quickly. There's lots of equity in the market, lots of people participating in the market. We dropped to just over 4 million in sales, but that is going to shoot up immediately if rates fall. I talked to a lot of clients who are saying, we're just going to wait for rates to fall a little bit more, which I think is a mistake, but I do understand people want a lower payment. Now, one of the things that I really think is interesting is I showed this graph before, but this is the highest in history. Almost 40% of people have their homes paid off. That is crazy. Like you walk down the street, that's close to half of every house you look at is probably paid off. Now, I've been watching this article go around by what people call the doomers, Crash Brothers, a friend of mine calls them, talking about that investment, the institutions own 35% of the market. meaning if you were to walk down the street, one of every 3 houses are owned by an institution. That's absolutely not true. If you see that video, I would just disregard it completely. The actual number is 0.4%, which is about 511,000. There's about 146 million homes on the market. So institutional buyers are not really impacting the market at this point because they make up less than 0.5%. Now, what is interesting is I pulled this other article up because I really wanted to see, are prices declining nationally and how are they doing in Florida? So this map breaks down and it's taking a look at changes in county level home prices since the respective peak in 2022. The more red, the more price correction there's been. So to say there's been no price correction would not be true. You can see a lot of areas have had price corrections, but the majority of the US actually hasn't had any price corrections at all. I really wanted to zoom in on Florida and taking a look here. So obviously I'm in Orange and Seminole County, but you can play around here and pretty much tell by the colors that the most of the area that we work, Orange, Seminole County, Seminole County up 5.2% since the peak. Orange County up 4.1%. So those are big increases, even nationally. There are places that are obviously higher. No places really in the red in Florida, but you can see that we have softening in the southwest part of Florida, like -4 to -5%. That means anyone waiting for a big price correction, it just hasn't happened. And with rates on their way down, don't get your financial advice from me, but they are not likely to go down. All these people are going to jump in the market when rates fall. Once we hit under 6.5% almost every time, we get a huge jump in mortgage applications, and we will definitely, in my opinion, see rates under 6.5% by year's end. And then last thing here, just looking at the health of the market. This is Florida housing demand. So just a couple quick stats. Homes sold above list price, 11.2%. You can see that's down, right, from, let me just pull this up over 5 years. We had this big spike, obviously, but you can see we're kind of in normal trend, right, other than when we went through the pandemic and rates got super low. Homes with price drops at 31.2%. That is higher, right, than normal. But I will say, when you look at the median price not really changing, it just means that sellers that have waited and got used to maybe getting wish pricing, like, oh, I'm going to sell the house for whatever I want. That's just not happening anymore. You're going to have to price your house competitively. And when you do, if you're a real estate agent, you know this to be true, they're going very quickly. And then last, I thought this was kind of interesting. For the top 10 most competitive cities in Florida, my office is in Oviedo. I live near Oviedo, Winter Springs. You can see Alafaya, Winter Garden, all these places. Really a lot of Seminole County, Central Florida in general, really booming, great place to live, and I really don't see that changing, and I see that just getting more competitive. Now, one of the things that is a big change coming up is the NAR changes, and when you look at the changes that are coming, one of the things, I covered this in another video, but real quickly, when you look at the top 20% of agents, they're doing almost 76% of the transactions. That means that 80% of the market is chasing 24% of the transactions. I don't know how this will all play out, but we need to figure out, both as lenders, mortgage people, title people, insurance, to make sure we're in that top 20%, because that's where all the money is made. And what I find is that most people, when I look at their schedule when we meet, this is what their day looks like. They do a lot of minutia and things like that, and there's a few little things that matter that actually move the needle for them growing their business. But at the same time, they're expecting results like this, right? That they're doing everything else and really keying in on the key events that matter. Meaning, again, this is what our week looks like, but again, this is what people want. If you ever thought about building a daily success plan, I would love the opportunity to meet with you one-on-one. It is more important than ever. More important, learning presentations, learning sales skills are the number one things, but so many people, I meet with them and I ask them, show me your whole past client system, from voicemail drops to text to contacts to how you're targeting them with social media and other things, and it's not really built out. Looking for how to grow your business in 2024 and 2025, the easy answer is work with people that know, like, and love you. If you don't know how to build a really good system around doing that, reach out to me. I'd love to help. If you're looking for a client to get pre-approved, I'd be honored to help there. You know, we really focus on the connection with the clients, borrowers, and realtors. Get them a great deal, make them clients for life, and I'd love the opportunity to do that with you. And as more information becomes available that moves the market, as always, I'm going to cover it right here. Have a great day, great week, and I'll talk to you soon. Bye-bye.